Good evening. It is Tuesday, the 24th of November 2020, and as you've probably seen in the news or in the title, the Dow Jones has breached the barrier of 30,000 points for the first time in history. If you think about it, that's pretty mind-blowing with everything that's going on in the world right now. So I wanted to make this quick little video on why is this happening, and do we expect more? Will it keep rising, or do we expect it to sort of go back into below 30,000. So the market actually just closed this evening here in Europe at 30,046.24 points. And I believe there's three main reasons why this is happening. First is what we call TINA. TINA means there is no alternative. Right now, there's nothing really to do with your money because of the super low interest rates. If you're getting near 0% interest rate in the bank account, but we do have inflation, it basically means that you're losing money by putting your money in the bank. So if that is happening, that's not something you like to see. And that combined with the stock market, which is already going up, you think, why am I losing money by putting it in the bank if I could also put it in the stock market and make money? So there is no alternative because the interest rates are super low. That is one. Number two, because of everything that's going on in the world, all the lockdowns and all the travel restrictions, governments, and especially the US government, have decided to put a lot of money into the markets. Not only the markets, but also into the entire economy. Trillions of dollars have gone in through stimulation from the government in the United States in the past months. And that means that a lot of money is flooding into the market with no alternative. So we're really pushing up the prices. And then there's a third thing that happened. There's been pretty promising news about vaccines. They said that they're super effective, so there's this light at the end of the tunnel that we hope that soon we will be able to pick up sort of a normal life again. And that has made a big transition into the type of stocks people have been investing in. During the whole crisis and with everything going on, the first stocks that really shot up were the tech stocks, because we can't travel, there's a lot of things we can't do, but we are doing a lot of things on our laptops online, so tech businesses are really shooting up. Now we're transitioning more into value stocks. Stocks that have been going on or been around for a very long time, and because we hope that we'll be able to travel again, that everything will open up again, there's finally a bit of air for oil companies, and there's, the stock market always looks ahead into 3, 4, 5, 6 months ahead. If we're opening up again, they will start making more money, so their profits going up, so right now the share prices are going up. So if you combine these three things, that there's no alternative, governments are putting a lot of money into the market, and the fact that we have this transition and the Dow Jones are the 30 biggest companies, then you sort of see why this is happening, even though, as I said, it's completely mind-blowing with everything going on. Now the important question now is, what can we expect from the future? If we look at all 3 points, first of all, will interest rates really go up soon? I don't think so, because what we really want, or what governments really want, is people to be spending money. And the lower the interest rate, the less likely you are to put your money in the bank. So in theory, you're going to be spending more, especially if we can open up again. Point number 3 with the vaccine. So more money will go into the economy, businesses will make more profit, and that means that basically the stock prices will go up. So that is the positive side. The stimulation from the government, now that is getting tricky now in the United States. Biden has won the presidential election, however, the House is going to the Republicans. And they both vary a lot in terms of how much stimulation should go into the market. And because they have to work together now, there will probably come some compromise, so it will be lower, at least that's what I am expecting. Stimulation will start going down, and it will be somewhere in the middle between where we're now and what the lowest numbers are that have been mentioned. So stimulation will go down a bit, interest rate will stay the same. However, if the vaccines, and that is sort of the if here, they get approved and people actually want to get vaccinated and the markets are going open, then of course more money will come into the economy, people will be relieved, and then we are probably going to see another increase. Now, I believe that no matter what is going to happen, that unless you're a trader, I'm not a trader, I'm an investor, I believe that you should always play the long-term game. And a long-term game here means have a fixed day in the week or in a month that you just buy some stocks, ETFs, trackers, and long-term you will get a 7% return on investment yearly with compounding effect. That goes up much more. Now I will release a video soon really explaining this and how I invest and how I believe you should be doing this. But in general, I believe you should always just be buying in a fixed day. If you really want to do some short-term trading, with everything that is going on that I just discussed, I can see this go up more.